Zoom. So Zoom, I like your Chiron. It's funny. Zoom bombs earnings, or was it? Was it? Pat, early this week, Zoom reported 54% growth, its first billion-dollar revenue quarter, and it landed in the market with anything but a bomb. It was a thud. It was an absolute. It was an absolute wailing. I remember watching it after hours, falling 5, 6, 7. I think it dropped over 12% after hours, from sitting around 350 to 300. And remember, this is a stock that was getting close to 600 at the peak of pandemic times. This is a company that's done nothing but grow, and it's seen almost a 40 and now a 50% retracement from its highs. So the question isn't really so much about should it be $300, $400, or $500 stock? Because again, that's not really what we do here. But the question is this still a company that's super viable and that people should be excited about because of the innovation and technology? And what in the numbers really warranted that kind of pullback? The pullback, Pat, long and short, came because the guidance. They're guiding more towards like a 25% growth next quarter. But remember, we're now in pandemic times where their pandemic quarters are being judged against other pandemic quarters. So 2018, this company did about $200 million in revenue total. Now you're talking about a company that by the 2021 is doing $1 billion a quarter. That is rocket fuel for growth. And people are like, huh. So it went up, and now at 54% and $1 billion a quarter run rate with $1 billion guidance into the next quarter, people are like, oh, that's not good enough. But normal had to come back at some point. We dealt with a cataclysmic, likely once in a lifetime event that drove the acceleration of Zoom. So some of its growth maybe warranted a pullback. I think that's what that 40% was. But in the rest of it, it's like, is the company doing well? And it's like, yeah, it's doing well. It's got triple digit revenue expansion, over 130% revenue expansion of companies with over 10 employees for 13 straight quarters. That means its companies are spending more money. It's grown to over 2,200 $100,000 a year customers that are spending money with them. That's great, robust, reliable recurring revenue, Pat, and over 500,000 paying customers at this point. It just spent $14.7 billion on Five9, which we talked about earlier. It's horizontal. It's going horizontal with its platform. It's building a platform with apps and integration. A lot to like. I'll give you one concern, and then I'll pass this back to you. My one big concern is Zoom is going to have to really figure out its approach to dealing with these new operating systems for work. These operating systems for work that are Teams, that are Slack, where video is a capability, but it's not the epicenter of the business anymore. I think async, you could argue, is the asynchronous communications is really the epicenter of our business, Pat, right? Like you and I chat on WebEx, right? It's when we do it when we have time and it's on demand. And I think a lot of work is like that. Now we're seeing that getting tied in with platform. We're getting it tied in with data. We're seeing it get tied in with ERP, CRM, back office, CX. How does Zoom, through strategic integrations, because who are they going to buy at this point that's going to inorganically bring in ERP and CRM and that whole stack and still be competitive? Or, does it get wrapped up in a company like an Oracle that wants to actually bring them in and build something competitive to them? But I think at this point, Zoom is the acceleration so fast, the growth so fast, it would be so expensive to do a deal like that I think they're going to have to do it through a bunch of interconnects and strategic partnerships. But that is my one concern. But it was a really good quarter. The sell-off, I just can't get there.
Zoom is up 382% in the past few years.
Huge.
And I think you have different types of investors who jump on a stock. I mean, you have retail, you have the big names that are a little bit less conservative, and then you've got the 401k folks who are super conservative. I think the reaction to this are the retail folks, which, who may have jumped on early, made some good money, and just wanted to hold on until a certain point. And I think those retail folks are jumping off here. Anybody who expected the growth to continue at that rate is a fool, right? And quite frankly, I don't know if you want them investing in your stock because they really don't believe in it. To your point of integration into full suites, I hear you there. I totally thought they would make a play for Slack, right? Or they would merge. You know, it was funny. I had thought before the pandemic hit that Slack would end up buying Zoom. That's before, you know, its valuation skyrocketed so much. And then Slack ended up getting bought by Salesforce. So I think that I think they do have to figure out the suite thing. But if I know these guys, I think that they're going to first try to build a very high quality yet simple chat. By the way, they have a chat, and I mean even beyond the video app itself.
Yeah.
But I don't think very many people even know it's there. But I think they're going to try to make a run with that because, as we know, it's all about the data. But it is funny though. If you think about email, I mean, the same concerns that I have about Salesforce, right? It's like a lot of the data is sitting in email, and how does Salesforce get access to that? How does Zoom get access to all that information in email and chat? You know, and at least the way their privacy and security goes, they don't even get access to the information in the video. So interesting strategic stuff here, Daniel. But overall, I think it was just a complete overreaction.